Good evening, everyone, and a very warm welcome to our panel discussion on accelerating India's pathway to sustainable infrastructure growth and a credit markets perspective. I'm Parul Mittal Sinha, Head of Financial Markets with SEB, and will be the moderator for this panel discussion for the next 45 to 50 minutes. India is working towards carbon neutral economic development and pushing the pedal on infrastructure investments, searching for the multiplier effect for growth. The Panchamrit commitments made by Prime Minister at the COP26 in 2021 have laid the foundation for this journey ahead of us. We have today with us a set of very highly accomplished panelists with extensive experience in infrastructure industry across core industry segments like cement, ports, steel, in renewables, and also as an investor across the entire spectrum of infrastructure subsectors. I'm thrilled to invite Mr. Arun Maheshwari, Joint Managing Director and CEO, JSW Infrastructure Limited. Mr. Arun has over 25 years of experience in the steel industry. Under his leadership, JSW Infrastructure has emerged as the second largest commercial port operator in the country. Having been in leadership roles across multiple verticals within JSW, sourcing, corporate strategy, international marketing, Arun brings with him a rich and diverse experience, and we will draw upon his experience as we talk about the building of state-of-the-art infrastructure in the country today. Mr. Atul Daga, Executive Director and CFO, Ultratech Cement, an Aditya Birla Group veteran of 36 years, Atul has a rich experience across a host of sectors like cement, retail, aluminium, carbon black, textiles, and more. Atul has been ranked amongst the top 3 CFOs in building materials segment in Asia by the Institutional Investors magazine. He's also pioneered raising finances through sustainability-linked loans in 2020, the first of its kind in India and only the second in Asia. And we'll talk more about this as we go through our panel discussion. Mr. Kailash Vaswani, President, Corporate Finance, ReNew Power. ReNew is India's largest renewable energy company by operational capacity today. In February 2023, ReNew made a strategic decision to rebrand itself to reflect the transition from a pure-play renewables company to a decarbonization partner, providing end-to-end solutions across decarbonization spectrum, including clean energy, storage, and carbon markets. Kailash is a founding team member of ReNew and has successfully led more than $10 billion of debt and equity capital raised cumulatively across the last 10 years. Clearly, he's cracked the code, and we'll quiz him more on this experience. Mr. Vinod Giri, Managing Director, Direct Investments, National Investment and Infrastructure Fund. He has more than 2 decades of investment experience across multiple infrastructure subsectors, across early stage, growth stage, and control transactions. He's amongst the few investment professionals in the Indian infra investments landscape with full investment cycle experience across more than 20 transactions. Very interestingly, NIIF is spearheading investments in the digital infrastructure space as well, with their recent partnership with AGP Investco, aimed at developing pan-India portfolio of hyperscale data centers. A very warm welcome to all of you. Our panelists today will help us examine how India's infrastructure growth story and sustainability ambitions are evolving, and also discuss how credit markets can complement and partner them in this decarbonization and sustainability journey. Before we begin, a few housekeeping rules to keep in mind. This session is being recorded, and we'll be taking audience questions throughout. You can scan the QR code behind us on the screen, and we'll try and weave them into our discussion today. So let me start with Mr. Arun. You have extensive experience in the steel industry, and have been leading the charge in development of infrastructure for ports, roads, and railway connectivity in the country. We all know that the carbon intensity of steel is very high, with every ton produced leading to 1.4 tons of CO2 emissions. How do you see the path to decarbonization in the steel industry, in the ports, and the road and railway industry?
Well, thanks, Parul, for asking this question. There are two segments to this question. One, if I have to take about steel per se, there's a lot of developments happening on the steel sector. In the last 1 decade, probably a lot of investments have gone into, especially into Europe, wherein reduction in carbon utilization in the steel making process has been happening, be it in terms of gas utilization or hydrogen utilization. So one company in Austria, especially they have done very, very good. In Sweden, they have done very well in the carbon neutralization. And India is not behind it. India, a lot of investments have been going into India, especially JSW or Tata's. They have been really forthcoming and forcing the future. What the kind of tariffs will be happening in Europe and other countries for utilizing carbon. So they are investing quite a lot in it. So I think the technology which are coming up now, especially even if I have to take the traditional technology of blast furnace in steel making, the scale of operations are so big that the carbon impact is not as high as it was earlier. Earlier, the cubic meter was 1,000 or 2,000 cubic meters. Now we are having 5,000 cubic meter blast furnaces, when the carbon utilization is less. The second part, if I have to look at on the infrastructure side, I think mechanization is playing a big role in reducing the carbon footprints. The traditional way of handling through non-mechanized routes or by the manual routes or utilizing the payloaders and other stuff for handling material is getting replaced by mechanization. The scale of operations are booming. Earlier, we used to see the ports of about 10, 20, 30 million ton kind of port. Now we are seeing 50, 60, 100, 120 million ton kind of ports. So the scale of operation immense. It reduces the carbon footprint per se. The different ways of handling the movement of material, be it rail, be it sea, be it river, those are the new methods of moving the cargo or by pipelines. If I have to talk about the development, the road dependency is reducing now. People are looking at, India is like, we are one of the largest in India for river movement cargo. So inland waterways, we do about 28, 29% kind of cargoes. So these kind of movement, these kind of initiatives are bringing down the carbon intensity per ton of cargo handled. So a lot of investments are required, but then India fortunately is at an inflection point wherein we are also futuristic. Growing market, good investment, and good promoters thought process. I believe all are imbibed and then we are looking towards this part of it.
Thank you, Arun. Now let me move to another hard-to-abate sector of cement, coming to Atul. With the rising capacity utilization, and we were just talking before the panel started, how any capacity being added is getting consumed very quickly. How do you see the CapEx plans in this segment? And then how is the sustainability agenda getting propelled in this sector?
Okay. I remember one session of Mr. Nitin Gadkari, and he had said that there would be, this is about 3 or 4 years ago, in that session he had said there would be so much of demand for cement in the country that Indian players will not have enough capacity available. And I was wondering, it's just not possible, because India is a surplus capacity market, 65% capacity utilization in a peak period. But guess what? We did, as Ultratech, we did about 95% capacity utilization in January, March. On an expanded base, we had expanded about 17 million tons last year. And we are falling short of cement. So yeah, the way India is growing, cement will be needed in the country, more and more cement. Today, give or take, India has about 575 million tons of installed capacity. And this will fall short. 575, you might have some dead, defunct, non-operating, inefficient capacity. But still, out of that 575, 540, I believe, is a hard operating capacity. And capacity utilizations are rising. So CapEx has to happen for cement also. Second part, and from Ultratech's point of view, we are focused on India growth story. We believe India will grow and we will continue to grow to support the growth requirements. Coming to your point of sustainability and how things are being done, first point is that if you're looking at India's economic growth, you cannot ignore infrastructure sector. If you're looking at infrastructure sector, you cannot ignore cement sector. And if you're looking at cement as a sector, you cannot ignore coal, because India doesn't have gas supplies to burn clinker and make clinker, so we are dependent on fossil fuel. In that scenario, and I'm so relieved when steel was being talked about, we do just 500 odd kgs per ton of cement, unlike steel, of carbon emission. So what we are doing is we are wanting to reduce this also, and not just UltraTech, the entire cement industry. Lots of initiatives. The biggest one is how do you reduce consumption of limestone, which means you are trying to produce variants of cement with the same quality, so that the roof doesn't fall, and same strength, same color, same fineness, but lesser clinker. So there are variants which are possible to produce. So these are operating decisions. Capex-led decisions would be investing behind, tying up with people like Renew Power to help us, use renewable energy, or use alternate fuel. Now, alternate fuel is a very big theme. There are a couple of plants in the world which run 100% on alternate fuel. Alternate fuel is garbage. Even garbage has combustible energy, so it needs to be segregated, cleaned, and you can use it as energy. So whatever quantum of garbage you can, wood chips, tire waste, etc. So, and then you have to invest behind it. Today at UltraTech, we are about 6% of our fuel is alternate fuel. We are investing. This year we'll be investing about $30 million to handle waste, to invest in feeding systems so that our alternate fuel consumption goes up from 6% to 9% to about 15%. There are heat recovery systems which we are investing behind heavily. All in all, this year we'll invest close to 1,000 crores on sustainability. So that's the agenda, that's the commitment which we have on reducing carbon emissions. 1,000 crores of investment this year. Next year also 1,000 crores of investments will take place. Our target is to reach about 50% non-fossil fuel by 2030, 36% by 25. So absolutely clear, defined path on which we are moving. Yeah.
No, thanks for that. Now let me move over to Kailash and to the renewable story in India. It's been a key pillar of the clean energy agenda of India, with more than 40% of our energy needs already being met by renewables. And with higher success comes higher aspirations and ambitions. So just wanted to get your thoughts and experience in this sector. What is the pace of growth you are seeing, and what kind of investments you foresee in this space? And is the product spectrum, the source of energy, is that also getting wider?
Sure, yeah. So I would say that it's not 40% yet. We would like to get there. But right now, I think just in the energy mix, it's around 12 to 15% of the power comes from renewable energy sources. And where we see the transition is that currently we are at 150 gigawatt of renewable energy capacity. The government plans to add another 500 gigawatt of new capacity between 2030-32 time period. So every year pretty much there's like a 50 gigawatt addition which is being planned. So, ballpark numbers, the $1 million per megawatt, give or take, takes you to a total investment size of almost, $500 billion to meet this energy transition aspiration. And obviously, we are seeing a lot of focus in this area from not only the government side, but also from the investor side. We're seeing a lot of capital chasing some of these projects. There are pools of capital which are called the ESG capital, which is available pretty much for companies who are either focused on the environmental side and have strong social governance systems, and are sort of moving towards this entire transition agenda. Now, obviously, as the share of renewable energy increases in the mix of the power mix in the country, it obviously adds an element of variability, because renewable energy is not firm power; it is intermittent in nature. So it brings with it, other opportunities, which are needed to sort of supplement the larger scale adoption of renewable energy. So you need sort of round the clock type of solutions, where you're using wind, solar, hybrid type of projects to meet to reduce the variability of renewable energy. Then there are storage systems which are also required. There again, we're seeing that, while the easiest form of storage is battery, but the cost is still prohibitive. So till though that cost comes down, one will have to sort of make do with, using renewable energy within the grid and sort of trying to disseminate it across the country. Now, where India has the advantage of having a single grid is that power gets consumed, even though, you may not be able to schedule the energy, but it would still get consumed because, somewhere or the other, there is a shortage which is there at all points in time. But as you go forward, there are solutions which are being developed. There are pumped hydro type of solutions, where pumped storage projects are being set up, which will enable, the power from renewable energy to be used to pump the power from a lower reservoir to a higher reservoir, so that the hydro energy can be generated, and then that can be used to meet the requirements. Similarly, green hydrogen as a theme is also coming up in a bigger way, which will enable sort of transition from gray hydrogen sources into cleaner ways of using hydrogen. So it will help the steel industry, the cement industry, hopefully the fertilizer sector, refining sector, and various sectors where hydrogen is required. That can be used, and also as a storage device it can be used, because you can sort of generate green ammonia from green hydrogen and then sort of transport it or store it till it's required, or use it for sustainable sort of aviation type of fuel requirements. So overall, I think as a country, we have put a 2070 target for achieving net zero. Renewable energy, green hydrogen, storage solutions, all of this is going to play a very important role in sort of transitioning the entire energy basket for the country. And also India, being a very low cost base for producing this energy, can actually become a supplier to the rest of the world also for these commodities. So as I said, hydrogen can be converted to ammonia and then be shipped across to other nations, where producing green ammonia may be more costly, and India could act like sort of the supply chain base for such opportunities. So yeah, I think India has an important role to play, I think, in the overall reduction of climate change impact in the world.
You mentioned that we are running towards a target of net zero emissions by 2070. Do you think the industry in India is keeping pace with that target, or is there a requirement for government to come up with sector-specific guidelines and targets?
No, obviously, right now, the target is still many, many years out, almost like close to 50 years out. So obviously, we are nowhere even scratching the surface yet. Even the the raw material or the modules, solar modules which are made in India, still have scope 3 emissions. We will be using glass, or we will be using polysilicon, which will use conventional power to make that commodity, which will then be used to generate clean energy. So you already are starting with the carbon footprint. So just from that point of view, everything in the supply chain has to change, and you need to use renewable energy to make renewable energy equipment, and so on and so forth. And as far as the government is concerned, they have been coming out with policies on green hydrogen. There's a green hydrogen mission which has been set up. There is, concessions given on wheeling banking arrangements There's exemption on open access charges, which is also granted for green hydrogen projects. And other multiple steps are being taken. But there's also a lot of capital which will be required, and we can talk about as we go forward.
Thanks, Kailash. Moving to Vinod to bring in the investor's perspective. There's a lot happening in the space outside of the sectors we've spoken across EV, smart meters, etc. How do you see growth trajectory in these emerging green sectors? And how important is sustainability focus when you look for investments in the infrastructure space?
Sure, thanks, Parul. Just to sort of maybe talk about broadly about NIF, so it's a quasi-sovereign fund. We're managing $2 billion, and currently we have made investments across transportation, energy, and digital, 6 investments. Predominantly an approach to control platforms, so that's the way we approach. I think more specifically on your question and real life example, so as far as investment is concerned, sustainability is really an integral part of the entire process, whether it's pre-diligence, post-diligence, portfolio management. So it's an aspect which is given topmost priority from an investment evaluation perspective. From a portfolio management perspective, I think it's all driven at the leadership level. It's all about culture. So there's a lot of push from the top, and when I say from the top, it's basically at the fund level to the platform management teams. If you look at some of the basic things that we do across our platform. So if you take an example of let's say our roads portfolio, right? So there is a clear priority to reduce our carbon footprint, and what I mean by that is most of our assets are actually located in where the electric supply will not be sort of consistent. So there's a lot of diesel consumption that happens today. So there is clear targets to really reduce the diesel consumption by moving to renewable sources, whether it's solar or wind. Similarly, all our vehicles that we operate on the roads, whether it's ambulance or the project level vehicles, we're moving to EV. Thirdly, even in terms of the whole energy efficiency, because there's a lot of energy consumption that happens. So there's a lot of sort of innovation that's happening at that front, just to ensure that we're really consuming the bare minimum that is required to run the show there. Even if you look at our other platform, like on the port side also, there is clear cut. So first of all, I think you need to sort of track data, you need to document it, you need to have a base kind of a tracking number for all the parameters, whether it's carbon footprint or sort of emissions into the wastewater, emissions into at the project sites where you're operating. You need to track them, and then YOY you need to have concrete targets, and I think that is where our efforts are. So even on our roads, on a ports platform, all our project sites have significantly moved to renewables. So we're not really taking much from the grid at this point in time. And I think beyond the ESG aspect, I think across platform, the other thing that is more relevant is the health and safety aspect, right? And again, even if you look at our road sector investment, we could potentially have sort of response time on accidents. That's something that we track very closely. And we will make investments beyond what is required under the concession agreement, just to ensure that we are conscious and we are ensuring that the response time keeps on reducing over a period of time. So I think from a sustainability perspective, it's a very integral part from an investment management perspective across platforms. Taking a step back at an NIF level, if you look at, we were the first, more as a fund business, we were the first one to see the country-focused climate fund called Green Growth Equity Fund. It's a $750 million fund. It's the largest country-focused climate fund anywhere globally. And those guys have done a phenomenal job in terms of setting up platforms on waste, water, EV mobility, C&I. As we speak, we're also planning another climate fund, which is going to be another $700 million fund. It's a bilateral kind of a fund. So there is a lot of work going on there. The other aspect, if I look at more from a business perspective, and I think we are seeing those benefits play out, at least from the C&I side. There's a lot of push from corporates to reduce their carbon footprint, and that's giving a lot of business opportunities for platforms like Renew and us as Ayana. But the other interesting aspect to keep in perspective, which is if you look at the multimodal share between roads and rail, and the last 3-year data, FY20, the share of rail in the overall cargo transportation was close to 22% odd. That number in FY22, of course, during COVID, it was rail, which was sort of moving goods, then roads. FY22, that number has moved to 27%, and FY23, we are tracking to get to 30-odd percentage. And what's happening there is two things. One is part of the DFC network has got commission, so that's led to some kind of a modal shift. And second, I think there's a lot of investment that's happening on Indian Railways. And they are actually trying to move cargo away from road by making the haulage charges more aligned to what the market wants, right? So these are kind of moments which takes decade to happen, and we hope that this trend continues. The other thing interesting thing that we're seeing at our transportation platform, it's a platform in partnership with DP World, and it's fully integrated. We have been able to get some case studies up and running where we have been able to pitch, the whole carbon footprint reduction in a manner where you are able to move certain number of trucks, and out of the system and move that go to a multimodal mode through a combination of rail and coastal. Of course, there's struggle on turnaround time because, road is point to point and any multimodal kind of a movement will require multiple handling and multiple efficiencies to come into play. On costing, we are well placed and we are surprised that at least one or two situations we have been able to get long-term contracts wherein the turnaround time is higher than what they are currently experiencing through roads. But I think that is also the initial thing that's happening, and that could be something very interesting to look forward. Yeah.
Well, thanks, Vinod. Our audience, there's a question from the audience, and they want to understand how do you measure the impact of your sustainable investments? Do you track them after the investments are made, and do you get help from your investee companies as well?
Yeah. So, good question. I think at every portfolio level, and that is what I said, it's all about culture. And the first starting point is really to track that data, right? And in a country like India, where the growth momentum remains to be very strong, YOY, your volumes will go up, right? So you have to track it on a per unit basis. And on a per unit basis, you have to take targets, right, which are realistic. And in every board meeting, right, ESG, HNS aspect are the first priority, right? So that's something that really gets very high attention from the senior management team. So I think the first step is to track, to recognize that and really have the culture of training and getting inculcated at the ground level, right? And use instances to show that you're serious about what you want to really achieve, right? And I think the starting point is tracking, making the team fully aware, sort of supplementing that with a lot of training, supplementing that with a lot of audits, internal as well as external audits, and really ensuring that audit findings are closed in time, right? So some of those are like, the practical aspect that you do at the platform level. In terms of mapping, yes, I think for a renewables platform, it's quite easy. Everyone, I think most of the leading platforms have a sustainability impact kind of a study every year. So it's more granular. But for other platforms, I think it's more tracking, let's say, the top 5 or 7 parameters on a YOY basis and ensuring that you are on the right track. And you take targets. It's not like it's a short-term target. You have a target for 5-7 years and you really continuously work on that. Thanks,
Vinod. Now that we have a more in-depth knowledge of various infrastructure sectors and what each sector may be doing in moving towards sustainability, let's move to the credit markets perspective now. What kind of role credit markets are playing today and can potentially play in supporting this journey? So Arun, coming back to you, coming to the sustainability-linked financings, you've been involved across multiple sectors for the JSW Group and have also issued an end-use specific green bond for the hydro energy business. There is a lot of push from the government also to build this ecosystem. And from your experience across your multiple deals, what do you think India can learn from and replicate from the global experiences and best practices in this space?
Parul, as a group, we are into multiple sectors, as we said earlier, whether it's steel, cement, energy, infrastructure, and wherein everywhere there is a need, we should be getting into this kind of commitments. So for now and for future, I don't think so. It's an option. It's a necessity. And when we talk about ESG-linked kind of credits, it is no more a liability in the book. It's an accountability. And the bottom line, if I have to look at it, when we look at the cost of fund, today the cost of fund is what is not only the interest payout, it is also what you are giving back to the society. What is your carbon footprint? How we are addressing that particular concern. Raising an ESG fund is not so difficult. But maintaining it with a very conscious mind is very important. So whenever we raise a ESG fund, or for that matter, anybody who wants to raise an ESG fund, there has to be clear-cut definitive timelines, target-oriented, how we are going to achieve that. Everything goes into play first. And thereafter, we approach to the market, this is what we are going to do. Because there's a commitment, there's a sound commitment from a group that this is what you are going to achieve. And this has to be in line with the country's specific goals also. By 2070, India wants to be carbon neutral. Of course, we can't foresee that far off because that's a country goal, but we can look at 2030, 2035, 2040, what we are going to achieve. So those are internal targets what we take. We take a bit more ambitious target than what country has taken. But then, as I said, at the end of the day, the cost of fund is, this is my interest cost, this is my carbon reduction cost, this is my technology investment cost, and this is how I'm going to achieve it. Clear-cut defined timelines, and this is what we look for. And for each segment, whether it is, though I was not involved in the hydro side, but then as a group, if I have to look at the group perspective and group ideology, we do that across all the verticals, whether it's steel, infra, or energy, or cement.
Thanks, Arun. Atul, coming to you now, and you are obviously one of the pioneers when it comes to the SLL financings in India. And you issued the first sustainability-linked bond, the 10-year bond in 2020 for $400 million. How do you see this space developing? And if you could also talk about the space from the domestic markets perspective.
You see, as we have, the country has taken targets of 2070 to be net zero, which means that clearly it's not a short-term solution that we are looking for, or the end goal is pretty far away. And a lot of investment is required to be done. It's not just P&L related changes, but balance sheet level items also required, which means a huge amount of investment is required. From cement or any sector, huge amount of investment would be required to achieve the target of 2070 becoming net zero. And today, I think the depth of the market is not there at all. If you're looking at 5-7-year money, 10-year money, and then it becomes absolutely dry, what is required is, as investors who are looking at financing the sustainability agenda, there have to be deep discounted structures, long tenor structures, and that is the appetite which is required for supporting the investment behind sustainability for any sector, not just cement, for any sector. And coming to the Indian bond markets, not really related, but Indian markets are very, very shallow. I think we can't see beyond, the appetite is very high in 3-year market, and you guys would, the bankers would know it much better than me. And as we go further, 5-year, you have to start, catch hold of somebody to finance. 10-year people, bankers start running away, investors start running away. Beyond that, it's hardly not there. So hardly any appetite is there. So I think that, and businesses, as an investor, as a financier, one has to see what kind of business you are getting into. Reflecting on the cement, once a plant is invested in, all the depreciation policies can be thrown out of the window, because once a plant invested in, if maintained well, will last for decades, a century also. So the asset is there, it is generating cash flow, and that is what one has to see as an investor, that there is support for, there's intrinsic asset available to generate cash flows. That is one. So tenor, one has to, the deep pockets are there, but their vision to support the business also is required. Second, I think we are in Indian markets, we are very plain vanilla markets. There are quite a few exotic structures which are possible, which I'm sure Indian markets will also soon start trying, if not today. So very soon you'll start seeing other structures as compared to a plain vanilla, tenor bond.
Thanks, Atul. Moving to Kailash now, in your space in the renewables sector, an SCB study, we estimate that there will be a financing requirement of $12.5 trillion by 2070, which is a long way away. In this backdrop, what do you think are the key enablers that can allow Indian infrastructure companies to tap the global liquidity pools?
Yeah, so again, over there, the numbers are very staggering, and the Indian market can obviously finance only a part of it. As a sector, I think the entire infrastructure sector is dependent on multiple pools of capital, and that's the only way in which the entire infra program of the country can be financed. Now there, unfortunately, the experience has been a little bit spotty. While we take 2 steps forward, there's always a step back also, which happens. Like most recently, in the budget, there was a likely expectation that withholding taxes, which was on a concessional rate till June 30th, would be extended for another certain period, because it's not that the infrastructure financing plan of the country has ended. But there was no such talk of it, and suddenly that cost has become double at least, depending on from where the funds will be borrowed. So it just adds to the cost. It adds to the cost of doing business or for financing the infra projects. I will have to bake it into my cost and increase my tariff at which I will then sell that energy. So it's not very productive. It is a bit counterintuitive in that sense. So that is an experience. Then, as Atul mentioned, the bond markets in India are very shallow. So while we require long-term capital, that sort of capital is never available. There were schemes which came out where, we could have taken credit enhancement, enhanced the value of the ratings of the underlying issuance, but didn't find too many takers. The insurance companies or the pension funds are not still investing because there are restrictions around, how either IRDA will sort of govern the regulations around them, or the pension trusts, pension boards would sort of have requirements on rating levels. So again, there needs to be like some support given along those lines. Then coming to the Indian PSU bank landscape, again, there have been a lot of financing support in the past in the power sector. It didn't go right for a variety of reasons, including, supply chain issues or on the fuel sources and so on and so forth. But for renewable energy, that has become like, a past which is sort of carrying on. So there is no new financing which comes mostly from PSU banks into this space. So still, they have not started lending in a big way into this space. Now there again, representations from the industry have been that, either you make it priority sector so that there is more support given. Because not that, any developer won't like to keep that margin. It's finally a competitive way in which the tariff is discovered. Everybody gets the same sort of cost, and you pass it on in the form of a lower tariff back into the consumer of the energy. So again, that is an area, which we are seeing that there is, some more sort of travel to be done. And then, companies like us and, others on this panel have been reliant on the dollar bond markets, where, till the time the rates were lower, that market was supportive. But now that market is also out of reach because, I cannot borrow at 8-9% dollar and then hedge it and then finance my projects. The local market is cheaper. So till the time that's available, we will rely on it. Maybe we run out of it after a point in time. So, we did some analysis at our end that, given multiple different pools of capital that we have access into, maybe $10-12 billion or more debt we can borrow to support our growth plans. But beyond that, we would be capped out. So we need bigger solutions. So, NAPFID, which is being developed, is a step in the right direction. The government has capitalized it well. So maybe, many more those sort of initiatives are needed.
No, thanks for that, Kailash. Very well put. Vinod, from your perspective, you're obviously leading the space in investments in infrastructure in India. From your perspective, what have you seen? How is this space developed? And you spoke about launching another fund recently, and you've got investments, foreign investors, long-term investors in these funds. How do you see the demand picking up for Indian infra assets, and what have been the other developments in India to help fund this story?
Sure. So I think, I run an infrastructure fund, so I'm quite optimistic on the entire landscape. I think if you split this into further subsectors, transportation continues to attract investment, and of course, it keeps on changing. Roads will be more driven by monetization of government assets going forward. On the PPP side, there's still a lot of work that needs to be done to really bring back institutional investors to develop greenfield projects on the road sector. Renewables is going to continue to remain strong. In the past, we've done 10 to 12 gigawatt every year. With the kind of targets we have, the aspiration is to get to 50 gigawatt, but forget that, even if you go double of what we are doing today, that requires significant investment to come in. The other interesting aspect that we have seen is on the smart meter side. I'm not sure many people know, but in the last 9 to 12 months, there have been bids which require an investment of close to 40,000 odd crores. And that's still halfway in terms of the target that government wants to achieve. So on energy, I think there is surely investment required on transmission distribution, because I think on the generation side, the more renewable capacity you add, you need to strengthen the grid. And at least the good thing about India is we are concurrently developing it. We are not sort of waiting for capacities to come in and look at transmission. Of course, you're still in an evolving stage. As renewable developers, we wouldn't like the substations and the transmission network to come fast, but it's always a catch-up, right? On the digital side, there's a lot of interest, and I'm sure as a bank, you're seeing a lot of financing opportunity. There's almost $4 billion kind of projects that are lined up. And these projects are announced by very credible players, including investors like us. So there's going to be a lot of action on that front. If I look at from a government perspective, I think on the investment side, they've done really well, both on roads and railways. So they've met 100% targets over the last 2-3 years in terms of the capex target that they had taken. I think one sector that could potentially sort of see traction, but a lot of, I wouldn't say reforms. See, renewables is a great PPP story in this country, right? And what really helped renewable is an entity like SECI, providing a long-term visibility on pipeline, linked on a very transparent bid process, standardizing the bid document, having a dispute resolution process, though we may still have challenges in terms of the time that it takes. But if those kind of building blocks can be laid down, and if you look at SECI, one big thing, even from a consumer perspective, let's say from a DISCOM perspective, given that we were able to aggregate demand, the end pricing for the DISCOMs are much better vis-a-vis they're trying to do it on their own, right? So it has been a win-win kind of a solution, and that's the reason you see the entire investment in the renewable space is happening by the private sector. Can that structure be replicated on the urban infra side, right? And if that can happen, if you look at NIP, 20% of capex in NIP is on the urban sector. Of course, currently the thought process is significantly being done by government, but just given the resource constraint that we have, if you can actually get even a semi-successful PPP model in that space, that could potentially take care of a lot of resources from a government perspective. And as institutional investor, if you look at Infra India, there's a lot of interest. So for the right kind of project, I think there's enough capital waiting to enter into the country. So, yeah.
Thanks. And with that, we come towards the close of our panel discussion. We remain a capital-hungry country. We have lofty sustainability targets, and the credit markets need to come up. We will continue to tap the international pools of liquidity and continue on this journey. With that, I'll thank our panelists, Mr. Arun Maheshwari, Mr. Atul Daga, Mr. Vinod Giri and Mr. Kailash Vaswani. Thanks a lot for giving your thoughts in this panel discussion. And a fantastic thanks to this wonderful audience. Thanks for sitting with us through this panel discussion. Thank you.